Forward to our presentation now, and our next presenter is now Akhona C, Bashe, and she's lead partnership from Liberty Group, and she is having a 10 plus years experience in the respective field. So her thoughts will be on digital drag race, incumbent banks, fintech, and big techs in a mix of disruptive synergies to benefit all. So let's welcome Akhona. Hi, Akhona, can you hear me?
Yes, I can hear you. Can you hear me?
Yeah, I can hear you perfectly. So, and I can also see your slides as well. So,
Perfect.
first of all, I would like to thank you for being here and for taking out time from your busy schedule. And we are looking forward to have a great session from you.
Awesome. Thanks. Thank you. Thank you. Hi, hello, good afternoon to everyone. Thank you, Team PGS, for inviting me to speak. Thanks, Serena. Thanks, Roma. I am both humbled and I'm honored to be a part of this session with you, these masterclasses with you this afternoon. So I'm going to start off with some disclaimers. Well, just one disclaimer that these are my personal views. A lot of the input that went into these slides are used as input into the work that I do. However, at the end of the day, I just wanted there to be clarity that these are my own views, which explains why they are not branded with the company that I'm working for. And lastly, folks, how do you eat an elephant? So these are like huge, majestic creatures. You know, these are any predator's perfect meal ticket. How do you even start to take them down? And similarly, with these banks, these huge, majestic financial services companies, like how do you even start to take them down? Especially because at some point or another, everybody on this call is somehow dependent on banks. And the trends literally confirm the old saying, one bite at a time. What we are seeing is that fintech and big tech are not trying to recreate what the traditional banks actually have. However, we see that they've started unbundling. We see that they've started disintermediating. They are decentralizing. They are disintegrating. And they are disaggregating some, not all, just some of the banks, the services that the banks do. And they're literally putting these bite-sized chunks, incorporating them into their existing value chains. And from what we are observing is that it does not seem as if they're trying to recreate what the traditional bank is doing. Not even are they trying to deviate from the existing banking models. The existing traditional models that they are in, their core business model. But I see it as almost like a facelift. Think Botox. Think finding ways to inject new revenue streams. So then we ask ourselves, is this the end of big banks? So what I hope to answer or achieve by the end of the presentation is how competition is affected by this digital disruption, whether traditional banks can survive big tech and fintechs taking them on. What is the competition from big tech and fintech? And what are the ongoing changes that are happening in the industry? So I have purposefully left out the banks in the slide that I have entitled Financial Techniverse. So you may be asking yourself, what is a Techniverse? It actually stands for Technological Universe. And to be honest, I honestly thought that I was onto something when I came up with this word until I Googled it and I found that it's been used sporadically in various publications. But for the context of this presentation, I'd like to define a Techniverse as a platform-based universe that provides services for all things financial. So a universe, as we all know, is defined as a whole system of matter and energy with which the earth and humans are only a part. So only a part being the key point here. And my point is that in a universe, there's nothing that exists in isolation, and that there is not one thing, there's not one energy, there's not one matter in the universe that is able to provide all the services that the universe requires or anything existing in this universe. Similarly, there are many players in the financial techniverse that coexist to make sure that needs are met. So what we are seeing makes it very hard to believe that at any point in time in the not so distant future, a single fintech or fintechs, a single big tech or big techs, a single bank or banks will be able to provide all of the financial services holistically that cater to each and every single unique taste and preferences of the financial services consumers. So now getting back to this point as to why I left out banks in the slide, we see like these big techs, we've got Amazon, which has made investments into TextPay and Tapso, Alibaba, Cabbage Pay, Microsoft, Finastra, Google, United Payments, Meta, Chainspace, Apple, which according to some publications is predicted to account for 10% of global transactions, credit card transactions by 2025, as well as Tencent. We see that all of these companies have made significant investments into fintech. But what's interesting is that apart from Alibaba, which is dabbling in interest-free financing, and Meta, which is dabbling in blockchain technology, all of them there seems to be a common theme in the types of investments that they're making, and that is in payments. Now, we all know that banks don't just facilitate payments. There's a myriad of various financial activities that a bank does that these fintechs or these tech giants currently do not have access to. So I think, or I can assert, that rendering them threatened at this point in time may seem to be a bit of an ambitious statement. I want you guys to look at the slide. And I get it, it's not exhaustive, but just look at it as it is. And just ask yourself this question. Looking at the slide at this point in time, are you comfortable or are you ready to move all of your financial services to any single one of these big techs or them collectively, cumulatively? And the answer is no, seeing that they're only playing in the payment space. And even if maybe, you want to say, okay, fine, the answer is yes. Truth be told, that regulation is prohibiting you to have a comprehensive financial relationship with any one of these big techs. So I'm not too sure about you, but to me, it seems as if banks are the missing link in this so-called financial techniverse. So some of you may be asking or wondering, like, why do we have these lurkers? Why do we have an AT&T logo, a Verizon logo, a Comcast logo, an Orange logo, a Vodafone logo, and a Deutsche? Well, to me, sometimes it looks like T-Mobile, but a Deutsche logo in the slide. Like, why do we have these telco logos in the slide? And I mean, I get this obsession of big techs encroaching financial services. What about telcos? For me, what makes telcos an increasing threat is that they already operate on these sophisticated technological platforms on a device that everybody has. So they have technology, they've got the potential of scalability, right? They can track your mobile activity, meaning that they're able to customize solutions for you, and they're accessible. So we've got accessibility, we've got scale, we've got technology, and the potential to be very customer-centric, which is like a quadruple threat and really, really optimizing their competitive advantage. So in this world, right, where we see these big companies trying to create these ecosystems, why would you leave an ecosystem that you already exist in that is so accessible to you by true virtue of having a mobile phone, you're connected to a telco? Why would you leave that ecosystem in favor for one that is not as easily as accessible as that one? And what we're seeing is that, or what we've seen, is how financial services has been revolutionized by Safaricom, which is a Kenyan-based telco, which created a new market of financial services in a very inclusive manner. And I'm going to touch on this a little bit later. But with this being said, let's admit that telcos are in a bit of a predicament. The current services are highly commoditized and growth is very slow. And we have to admit that with the introduction of 3G and 4G, performance-wise, they are being proper superseded by these digital streaming companies, your Netflixes, your Amazons, and the types. So they are looking for growth opportunities, and they are looking to monetizing these 5G use cases. And the advantage that they have is connectivity. They are teleconnectors. They've got an ability not only to bring people together, but to bring everything together. Telcos have got the infrastructure to do so. So they are teleconfigurators, and literally it's ready, set, go for them. Telcos can facilitate this cohesion. They are able to facilitate various players within an ecosystem. So I've called them tele-cohesive companies. And by true virtue of operating, as I keep mentioning, on a device that everybody has, a telco at any given point is central to the distribution of any service. So whether you are Googling Tencent, whether you are listening to an Apple streaming, whether you are watching Amazon, watching Netflix, a lot of the time you're doing it on the very device that is automatically linked to a telco. So I have called them telecompetitors, which means that they can easily break into the space. And once they have found the use cases, they could actually potentially be even greater competitors than big tech companies. And what I've included, like right at the bottom, are retailers, because we're starting to see trends of retailers also trying to get their foot in the door when it comes to financial services, predominantly in cash-based distribution. But regardless, we're seeing that retailers are also playing in this fintech space. And telcos, you guessed it, they are dabbling in, once again, payments. That one part of financial services that is very, very easy to unbundle. So the purpose of this slide is to showcase the strategic advantages that big tech has over banks as optimal fintech carriers. Okay, so I just confused myself. Let's just break this down. Why is it that big tech and fintechs, why is it a match made in heaven? Why are they the perfect couple? It's because big techs have got an ability to scale. So big tech have got funding, they've got the scale, they've got the capacity combined with fintech to either transform their legacy systems or to add new businesses. They've got the analytics, they've got the skills, and they've got the ability to provide these frictionless, seamless customer experiences. And this diversification can enable a new revenue stream. These big techs and these fintechs are creating new and evolving technology. They are able to leverage off something like the cloud, and their understanding of how the cloud not only changes current business models, but has the ability to create new business models. They've got that on their side because they are creating those technologies. They've got a very, very key in-depth understanding of APIs in connecting data and ensuring that software and different companies or different players in this ecosystem are speaking to each other in a very seamless, frictionless way. And I'd like you to think of these APIs as almost like the connectors in that Techniverse that I had in my previous slide. They also understand the cost benefits as well as the ethical benefits of cloud and productivity as well. So now, I mean, if you were to take those cost savings that they are enjoying from the cloud and redirect that pool of funds to fund new alternative revenue streams, Bob's your uncle. They've got a technological head start. So they've got skills, they've got culture, they've got mindset, socialization, and the agility to take banks on. And ultimately, let's admit, they're making banks sweat simply because they are putting banks in this very uncomfortable position where they have to rethink business models that they've used to monopolize the financial industries for years, decades. Some may even argue centuries. So then, what then becomes the defensive strategy? So I've got 10 bricks here, and these bricks, they represent the core operations of the big tech companies, e-commerce, online advertising, media streaming, blah, 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 blah. And what we're seeing, the red blocks, are banks defensively starting to make investments into the very enablers that were giving big techs that competitive advantage. So tech funds, along with their competitive advantage, are now able to share this advantage with banks, and banks are taking full advantage of it. And unlike financial services that have a high barrier of entry because of regulation, we all know that, that technology decentralizes. So it means that it's got a very low barrier of entry. And what we're starting to see is that in just about any activity in modern banking, organizations are powered by these digital applications, these advanced analytics, which are streamlined by automation. We're seeing e-commerce, we're seeing cloud, we're seeing advanced software, we're seeing artificial intelligence in banking ecosystems. We are seeing changes in the operational model, and we're seeing the adoption of cloud. We're also seeing significant investments in upskilling human capital, which one could argue is the biggest hurdle, which is the biggest barrier of entry. But I mean, you cannot compare that to regulation. And we're starting to see a platform-based infrastructure, which brings me to the offensive strategy of banks. So using these big tech enablers, they are able to build these platforms, these highly networked, complex, but simple ecosystems that have a presence in every single touch point of a consumer. And we see that these are incentivized by rewards. So they are leveraging off of the behavioral economics of gamification. So they're using gamification as an incentive, right, to link you up to big techs, to travel partners, to retail, fintechs, digital, the lotto, estate agents, various companies. They're building they're creating these interdependencies and ensuring that they've got a presence at every single consumer touch point. And what more would you want than a central ecosystem where you can perform everything financial? And banks, whilst the regulators are remaining quiet with regulation, they've got the license, they can run ahead. So as long as regulators are remaining mum in regulating the new way that finances are going to proceed, the banks have got the license to run ahead, which then puts the big techs at a back foot. So we notice that technology may have aided in the decentralization of financial services, but the way that we're starting to see it is that nobody has really lost out. If anything, these companies are simply pivoting their business models to remain relevant. And what we are observing is that this decentralization, right, that is brought on by technology is simply just giving the consumer more options. So the individual needs can be catered for according to their unique preferences. I mean, in Africa, right, we saw how telcos captured previously uncaptured markets. And you cannot say that they took the market share from the banks because that market share didn't exist. This was a cash-based society, and they simply through telco and the infrastructure of telco brought this into the banking system, very similar to microfinancing in India. So there is you can't argue that the bank's lunch was eaten. They created a new market. So, and I completely get it. In our minds, we're picturing, John Doe, who's an Apple enthusiast, who's got his iMac, his iPod, his iPad, his MacBook, his Apple Watch, his streaming, and all he wants to do is consolidate all of his finances into this ecosystem that he's super, super happy with. But that's just one persona. You have those who would prefer banking with their retailers. You have those who are more than happy staying confined within the ecosystem of their telcos. And also you have that persona who is very happy in staying with the bank, that they've created a relationship, and most importantly, that they trust. So then you ask ourselves, is this the end of big banks? I think not. If anything, technology has provided options for consumers, right? And what we are seeing because of these options, right? We're seeing businesses pivoting their business models, right? There's no big tech that's going into banking. They're just leveraging off of certain aspects that they can capture to enhance their value chain. They don't want to change their core focus into banking. It's just, how do we benefit from this unbundling? We're seeing a lot of collaboration, and interestingly so, we're seeing a lot of collaboration between banks and big techs. So they're not working against each other. We're seeing this collaboration. And as a result, one cannot argue that there's a one-size-fits-all solution to financial services, because we all have different needs, we all have different resources, and we all have different preferences. Thank you very much. That is the end of my presentation.
Hi, Akhona. Thank you so much for your interesting session. And I'll ask the audience that if they are having any question, they can ask you in the chat or in the Q&A session. I think we have already received a few questions. So, Akhona, you can answer them in the chat. Okay. And thank you so much.